Okay, so get this. Warren Buffett beat the market by over like 5 million%.
Wow, 5 million.
Yeah, it's not a typo. 5 million%. Crazy, right?
It's pretty astounding, yeah.
Makes you wonder what his secret is, right?
Definitely.
Well, you shared this really interesting article from The Motley Fool.
Yeah.
It's all about how Buffett actually picks companies, what he looks for.
Uh-huh.
So we are diving into that today, going beyond just like the basic, finding a cheap stock kind of thing.
Well, okay. Yeah, what are we uncovering?
So it's really all about how Buffett looks for what he calls these really outstanding businesses.
Okay.
And that's where I think things get really interesting.
Yeah, I'm intrigued.
Buffett is famous for like loving a good deal.
Right.
But, it sounds like there's more to it than that.
Yeah.
He's not just looking for companies that are undervalued or anything. He wants great businesses at a fair price. So it's almost like, he's saying, sure, a bargain is great, but I'd rather own a piece of something that is truly exceptional.
Yeah.
Even if I have to pay a little bit more for it.
There's that long-term vision. Yeah.
Exactly. And he has this great analogy that he uses to kind of drive that point home.
Oh, I like this.
It's better to have a part interest in the Hope Diamond than to own all of a rhinestone.
Oh, okay. Yeah, I see where he's going with that. Yeah.
Right.
A rhinestone might sparkle, but
Yeah.
it's ultimately, worthless compared to a genuine gem.
Right.
It's, it's smarter to invest in quality, even if you can't afford to own the whole thing.
Exactly. So that's the question. How do we spot those Hope Diamond companies? What does Buffett see that, the rest of us miss?
Yeah.
And the article gives us kind of some clues by looking at some of his all-time favorite companies.
Oh, okay. Let's hear it.
So think American Express, Coca-Cola, Apple, Moody's.
Interesting mix. What do those all have in common besides being like wildly successful?
Well, they're all large companies. They're all incredibly profitable, and they're all pretty much household names at this point.
Right.
That kind of brand recognition is invaluable. Right.
It certainly does create a competitive advantage, yeah.
Yeah.
But I feel like Buffett digs like deeper than that, right?
Oh, absolutely.
The article mentioned this thing called high return on net tangible equity.
Yes.
Now, what exactly does that mean, and why does he care so much about it?
That is a good question. I'll admit that one sounds a little intimidating.
Yeah.
When you first hear it. But
it's actually simpler than it sounds.
Okay.
Imagine you have two lemonade stands.
Okay.
Okay. They both make $100 in profit, but stand A only needed $50 worth of lemons and sugar and a table, whereas stand B needed $100 worth of stuff to get to that same profit.
Got it. Yeah. So stand A is like way more efficient.
Exactly.
With their capital.
Yeah. Exactly. That's what return on net tangible equity is all about. How much profit a company generates for every dollar invested in its tangible assets.
Got it. Okay, so Buffett's looking for companies that are really good at squeezing profit out of their investments, like that lemonade stand A.
Precisely. And companies that can consistently churn out high returns, they tend to have real staying power. They're not just flashes in the pan.
Right, and that's exactly what he's looking for, right?
Yeah.
Companies he can hold on to for years, maybe even decades.
That long-term perspective, yeah, that's one of his kind of hallmarks, I guess.
Right.
He's not chasing quick wins. He's building lasting wealth.
Yeah.
So those consistent earnings, that high return on equity, that's a signal to him that this company can weather the storms and come out on top.
Right. So it's about more than just finding a company that's, doing well right now, but actually one that has the potential to keep doing well for years to come.
Yeah, that's the key. It's like that Hope Diamond analogy, right? You want the investment that will shine for generations, not just sparkle briefly and fade away.
Right, exactly.
Yeah.
It's funny, we talk about investing in these Hope Diamond companies.
Yeah.
But most of us aren't, buying up entire businesses like Buffett does.
Right.
Even if you're just, buying a few shares of stock.
Right.
It's kind of the same principle, right? You want a piece of something truly exceptional.
For sure.
And it reminds me, we talked earlier about how Buffett loves these companies that reinvest their profits instead of paying, big dividends.
Yeah. Yeah. He sees it as a way for those companies to compound their growth, right?
Right.
A snowball rolling downhill, it just gets bigger and bigger.
Right. But here's the thing. How do we actually know if a company's like reinvesting wisely? What are the signs that it's not just growing, but growing in a way that'll actually benefit us as investors?
Yeah, that's where we need to do a little bit of detective work. It's not enough to just see that the revenue is going up. We need to look deeper and see if that growth is actually translating into real value.
So what are some, like, clues we can look for?
Well, one thing I always look at is research and development. Like, is the company investing in innovation? Are they coming out with new products or services?
Right.
That's a sign that they're not just sitting back and coasting on their past successes.
Right. They're being ahead of the game.
Exactly. And another thing to consider is their acquisition strategy.
Okay.
Are they buying other companies? That make sense.
Right.
Acquisitions can be a great way to expand into new markets,
Right.
add complementary products, but they need to be done strategically.
Yeah. It's like building a puzzle. You don't just want to force any old piece in there. It needs to fit.
Exactly. And of course, we can't forget about capital expenditures.
Yeah.
Is the company investing in its infrastructure, upgrading its equipment, building new facilities? These are all signs that it's preparing for future growth.
Right. They're not just thinking about, like, next quarter's earnings. They're thinking about the next decade.
Right. And all of that is driven by the management team, right?
Yeah.
Do they have a clear vision for the future? Are they making smart decisions with the company's resources?
Right. I guess even the best strategy won't work if the people at the helm aren't, like, up to the task.
Exactly. It all comes down to leadership.
It really does. You know, this whole conversation about reinvesting profits got me thinking.
Yeah.
We've talked a lot about the kind of, like, financial side of things.
Right.
But what about the, like, less tangible aspects of a business? Things like brand reputation,
Yeah.
customer loyalty, company culture. Like, do those matter to Buffett?
Oh, absolutely. Those factors might not show up directly on a balance sheet, but they can be incredibly valuable.
Right.
A strong brand can command premium pricing, loyal customers provide repeat business,
Sure.
and a positive company culture can attract and retain top talent.
Yeah, it's like that secret sauce that makes a business truly great.
Yeah. Exactly. But how do we actually measure those things? Especially if we're looking at companies that aren't household names.
Right. Yeah, it's not as easy as just, like, looking up their financials.
True, but we can still do some digging.
Okay.
One thing I like to do is look at online reviews. Like, what are customers saying about the company? Are they raving fans or are they complaining about poor service?
Right. You're like a digital detective, kind of
Something like that.
piecing together the clues.
Yeah, and don't forget about employee reviews on sites like Glassdoor.
Oh, right.
Do employees seem happy and engaged, or are they constantly grumbling about the work environment?
Yeah, it's a window into the company culture.
Exactly. And you could also look at the company's marketing materials, public statements. Do they articulate a clear brand message and values? Do they seem authentic and trustworthy?
Right. It's about getting a sense of their, like, personality, their soul even.
Right. It's like you're trying to understand the whole person, not just their outward appearance.
I like that. Okay, let's shift gears a little bit and talk about something that I know Buffett has strong opinions about.
Okay.
Stock buybacks.
Yes.
The article mentions that he's not a huge fan of them, especially when companies seem to prioritize them over investing in growth.
You're right. Buffett has been critical of stock buybacks in the past.
Yeah.
He sees them as a missed opportunity to compound value over the long term.
Right.
It's like taking money that could be used to build a bigger and better business
Yeah.
and just using it to inflate the price of the existing share.
Right. Right. But are buybacks good for shareholders?
Yeah.
Doesn't it, like, make their shares worth more?
It can, but Buffett's point is that it's often a very short-sighted move.
Right.
He would rather see companies invest that money in projects that will generate real, sustainable growth.
Okay.
Growth that will ultimately benefit shareholders much more in the long run.
So it's about prioritizing long-term value creation
Exactly.
over, like, short-term gains.
Exactly. And that's a recurring theme with Buffett. He's always thinking about the long game.
Right.
He's not interested in quick flips or financial engineering.
Right.
He's looking for companies that are building something special, something that can stand the test of time.
Right. And that kind of brings us back to the concept of dividends, right? We talked
Yeah.
earlier about how Buffett prefers companies that reinvest their profits rather than paying those big dividends.
Right. He sees dividends as another example of short-term thinking.
Okay.
He believes that the best companies are the ones that can compound their earnings over time by plowing those profits back into the business.
Yeah. So it's like a trade-off
Yeah.
between short-term income and long-term growth.
Yeah.
And Buffett is firmly in the long-term growth camp.
He is. And, you know, it's interesting to think about this in the context of today's world.
Yeah.
We live in a culture of instant gratification. We want everything right now.
Right.
But investing is a marathon, not a sprint.
Right. It's about delaying gratification. Being patient and letting those investments compound over time.
Exactly. And that's one of the biggest challenges for investors today. Yeah. It's easy to get caught up in the hype of the latest hot stock.
Right.
Or the promise of quick riches.
Sure.
But real wealth is built slowly and steadily by investing in great businesses and letting them grow over time.
I like that. And speaking of today's world, I think we can't really ignore kind of like the elephant in the room.
Yeah.
Artificial intelligence, AI.
Yeah.
It's everywhere you look these days.
Yeah.
And it's transforming industries at an incredible pace.
It's certainly a game changer, and it's creating a lot of excitement, but also a lot of uncertainty.
Right.
As investors, how do we make sense of it all? How do we identify the companies that are truly leveraging AI to create lasting value and not just riding the hype wave?
It's like the gold rush all over again.
Oh, yeah.
Everyone's scrambling to stake their claim, but it's not always clear where the real gold is.
That's a great analogy, and I think it's where Buffett's principles can be incredibly helpful. Even though he's known for being a little bit cautious about technology,
right?
His core ideas about business fundamentals, they still apply.
So how would we apply those principles to the world of AI?
Well, for starters, we can look for companies that are using AI to solve real-world problems.
Yeah.
Companies that are creating tangible value for their customers, not just throwing around buzzwords.
Right, so solutions, not just speculation.
Exactly. And we can also look for companies that have a proven track record of innovation.
Yep.
Companies that are constantly pushing the boundaries, coming up with new ideas. Because the world of AI is evolving so rapidly, you need a company that can adapt and stay ahead of the curve.
So agility is key.
Absolutely. And don't forget about the ethical implications of AI.
Right.
This is a powerful technology.
Yeah.
And it's important to invest in companies that are using it responsibly and ethically.
Right. Doing good while doing well.
Exactly. I think Buffett would agree that integrity and ethics are essential ingredients for any successful business.
Yeah.
Especially in the age of AI.
Yeah. Okay. Let's zoom out for a moment and think about the kind of bigger picture here.
Okay.
We've talked a lot about specific investment strategies and metrics.
Right.
But what are some of the broader lessons that we can learn from Warren Buffett? What are the underlying principles that have guided his success, not just as an investor, but as a human being?
That's a wonderful question, because I think Buffett's wisdom extends far beyond the realm of finance. One of the most important lessons is the power of patience. He's known for his long-term perspective.
Right.
He's not interested in quick flips or trying to time the market. He's content to hold on to his investments for years, even decades, as long as the underlying businesses are performing well.
Yeah, so resisting that urge to chase short-term gains and focusing on building that lasting wealth.
Exactly. Another key lesson is the importance of discipline. Buffett has a set of investment principles that he sticks to. Regardless of what the market is doing, he doesn't get swayed by emotions or fads. He stays focused on his strategy.
So having a plan and sticking to it, even when things get, kind of tough.
Right. And finally, I think one of the most valuable lessons from Buffett is the importance of integrity.
Yeah.
He's built a reputation for honesty and fairness. And that's earned him the respect of investors and business leaders alike.
Yeah. So it's not just about making money. It's about making it the right way.
Exactly. And I think that's a lesson that we can all apply to our lives, both inside and outside of investing.
We've talked a lot about how Warren Buffett really prioritizes these companies that reinvest their profits wisely.
Right.
But it's, easier said than done.
Sure.
So how can we, everyday investors, actually spot those companies that are really putting their money where their mouth is? What should we be looking for?
Yeah, it's all about kind of separating the show horses from the workhorses, right?
Okay.
A company can talk a big game about reinvesting in growth, but we need to see the receipts.
Right.
And one of the most telling signs is a consistent commitment to research and development.
Okay, so they're not just kind of riding the wave of their current products, but actively creating that next big thing.
Exactly. Take a company like Amazon, for example.
Yeah.
I mean, they pour billions into R&D every year.
Right.
And it's a big part of why they've been able to stay ahead of the curve in so many different areas.
That makes sense. Yeah, it's like planting seeds for future harvests.
Exactly.
So what else should we be paying attention to?
Well, strategic acquisitions are another big one. Is the company using its profits to buy up other companies that kind of complement its existing business? This can be a really powerful way to expand into new markets,
Sure.
gain access to new technologies, or simply just eliminate the competition.
Right. Yeah. So it's almost like they're kind of assembling like a dream team of businesses, each one like bringing something unique to the table.
That's a great way to think about it.
Yeah.
And of course, we need to look at capital expenditures. Is the company investing in its infrastructure, upgrading its equipment, building new facilities?
Right. Right. So they're really putting their money where their mouth is.
Right. Literally.
Literally.
Yeah.
But, it occurs to me that even with like the best intentions, a company's reinvestment strategy can kind of go astray
Oh, yeah.
if it doesn't have the right leadership.
For sure.
So we also need to look at the management team, right?
Absolutely.
Do they have a clear vision for the future?
Yeah.
Are they like good stewards of capital? Are they making smart decisions?
Right.
That'll actually create value for shareholders over the long term.
It all comes back to leadership.
It always does.
Yeah.
The best strategy in the world isn't going to work if you don't have the right people executing it.
Exactly.
We often talk about the successes of like these great investors like Buffett.
Right.
But do you think there are any like valuable lessons to be learned from their mistakes?
Absolutely. Nobody's perfect. And even the most brilliant investors make mistakes.
Right.
And studying those mistakes can be just as illuminating as studying their triumphs.
Yeah, it's like learning from the best, even when they're not at their best.
Exactly. And one of the most famous examples is Buffett's investment in Berkshire Hathaway itself.
Wait, his own company?
Yes, it might seem counterintuitive, but Buffett has openly admitted that his initial purchase of Berkshire Hathaway was a mistake.
Wow.
He bought it thinking it was an undervalued textile company, but the textile industry was in decline.
Right.
And the investment ended up kind of dragging on Berkshire's performance for years.
So even the Oracle of Omaha can like misjudge an industry
It happened.
or company.
It happens, but here's the really interesting part.
Okay.
Buffett was able to turn that mistake into a triumph.
Right.
He used Berkshire Hathaway as a platform to acquire this diverse range of businesses, eventually transforming it into the conglomerate we know today.
Wow. So he like pivoted and adapted,
Yeah.
kind of turning a lemon to lemonade.
Precisely. And I think there's a powerful lesson in that.
Yeah.
Sometimes our mistakes can actually lead us to unexpected opportunities. It's all about how we respond, learn, and adapt.
It really is. One of the things that strikes me about Buffett is his just incredible patience. He's been investing for decades, and he's still going strong.
Yeah.
And in today's world of, like we said, instant gratification, that kind of long-term thinking almost seems radical.
It is radical, and it's a big part of what sets Buffett apart. He's not swayed by the latest fads or the short-term fluctuations of the market.
Right.
He's playing the long game, focusing on building sustainable wealth over time.
It's like he's saying, I'm not interested in getting rich quick. I'm interested in getting rich right.
Exactly. He's willing to wait for the right opportunities, and once he finds them, he's willing to hold on to them for years, even decades.
Right.
He understands that compounding is the most powerful force in investing and that it takes time to work its magic.
So patience isn't just a virtue. It's a money-making strategy.
It certainly can be, and I think it's a lesson that applies to all aspects of life, not just investing. If we can learn to be more patient, to delay gratification, and to focus on the long term, we're likely to achieve greater success and happiness in all our endeavors.
Well, as we kind of wrap up our deep dive into Warren Buffett's world,
Yeah.
I'm curious to hear your thoughts on like something beyond just investing.
Okay.
What can we learn from Buffett about like living a fulfilling and meaningful life? What are those broader lessons that kind of resonate with you?
That's a wonderful question to end on. Buffett's wisdom certainly extends beyond the realm of finance. One of the things that stands out to me is his commitment to integrity.
Yeah.
He's built this reputation for honesty, fairness, ethical behavior.
Right.
That kind of integrity is rare, especially in the cutthroat world of business, and I think it's a big part of why he's so respected and admired.
So it's not just about making money, but about making it the right way.
Exactly. And another thing that impresses me is his incredible generosity.
Mm-hmm.
Buffett has pledged to donate the vast majority of his wealth to charitable causes, and he's inspired countless others to do the same. He understands that true wealth isn't just about accumulating money.
Yeah.
It's about using that money to make a positive difference in the world.
So living a life of purpose
Right.
and impact.
Right. And finally, I'm struck by his zest for life.
Yeah.
Even in his 90s, he's still going strong, still learning, still curious, still enjoying the ride. I think that's a powerful reminder that life is a gift, and we should savor every moment.
Well said. And on that note, I think we'll wrap up this deep dive. Thank you for joining us on this journey into the mind of Warren Buffett. And remember, the most important takeaway isn't about, mimicking his specific investment strategies.
Right.
It's about understanding his underlying principles and applying them to our own lives in a way that makes sense for us.
Absolutely.
Thank you for listening. Until next time, keep learning, keep growing, and keep diving deep.
It's been a pleasure exploring these ideas with you.